Hey guys, this is Reese Treno, the Vanguard Team at Manor Realty. Guys, the economic experts that I told you are always right. Benjamin Tao at CIBC and McKenzie and those guys at RBC, they're always right. They've been right for years. They were wrong, and in a good way for us. They thought that the interest rates were going to be dropped by about 0.25% gradually over time. And by 2026, the end of 2025, we'd be at 2.75%. Now they're predicting faster interest rate cuts. And why are they doing that? It's a complex thing, right? And I will relate this, guys, to how it affects us investing in real estate in Windsor in particular in a second. But you have to understand the context. You can't drop too quickly when the United States wasn't dropping at all, right? They were at the same interest rate for, I think, a couple of years. And they just all of a sudden dropped 0.5% overnight because their labor market's getting soft. All right, great. How does that affect us? Well, that now allows the Bank of Canada to do what it wants to do, which is drop the interest rate more rapidly. It can see that we need to put air into the economy, right? And you can do that by dropping your interest rates. However, this is why they haven't done it as quickly as everybody would want. And this even gets missed by the pundits. If you drop your interest rate faster than the United States, so let's say we drop all the way to 2.5% tomorrow, and the United States is still at 4.5% right now. What you're doing is you're actually affecting how people invest into Canada. They dump money into things like bonds. They want an interest rate return. So if their interest rate return is 4.5% in the United States and it's 2.5% in Canada, guess what? All that foreign direct investment doesn't come to Canada anymore. It goes to the United States. All of a sudden, we have less money to use for investment in our businesses to grow them and everything else. There's less money in the system. There's less investment going on in the Canadian system. What does that do? That weakens our Canadian dollar. Against what? The American dollar. Where do we buy an absolute ton of our goods and services? Who's our number one trading partner? The United States. So if the Canadian dollar gets weaker because all the investors are leaving because of the interest rate differential, all of a sudden now what happens is, and feel free to reverse this a couple of times, but because now the Canadian dollar gets so weak against the American dollar, it now costs more money to buy stuff. What does that sound like? Inflation, right? So you can't, it's kind of like the old saying, I think that Pierre Trudeau said first, which is that if America sneezes, Canada catches a cold, right? Our economy is too hitched to the Canadian or the American economy, so that your interest rates have to stay fairly close together. We can't just do what we would do otherwise, because then inflation will hit us a different way. So that's the background context. But now what's happened, and I'll relate this to Windsor real estate investment in a second here. So what's happening now is the United States all of a sudden has dropped their interest rates 0.5%. That allows us to drop our interest rates pretty aggressively, by 0.5% rather than creeping it by a quarter at a time. And what you'll find is that boosts the economy, and that is also going to make the cost of borrowing cheaper, which means more people are going to be buying homes, and more people are going to be investing, and more people are going to be doing all sorts of things with real estate, right? What they haven't basically figured out is they know that we're not building enough housing fast enough, right? So they're accepting the fact that as we drop these interest rates, the problem is too much of Canada's economy already runs on real estate, and you're going to add fuel to that fire. But you don't have a choice, because you have to get the rest of the economy going, and that requires cheaper costs of doing business, cheaper costs of borrowing. So as an investor into Windsor, understanding that over the last 2 years, we've added 31,000 people to this community in 2023. Bear in mind, we only had about 430,000 people. In 1 year, you added 31,000. This year, 2024, we're supposed to be getting in at least another 40,000 people. So in 2 short years, you're adding over 70,000 people to a community of about 430,000. All of a sudden, you're up to 500,000 from 430,000 in the blink of an eye. Where are they all going to live, right? It puts massive upward pressure on the local real estate market, which means that As an investor, you can take advantage of this a whole bunch of different ways. You can build down here, right? The federal government is about to approve right across Canada standard fourplex and standard sixplex designs that no city can say no to. If you've already got the zoning, the city bureaucrats can go flitter off because you're already pre-approved by the federal government for those designs. So you can come down here, you can get an infill lot off of Sadie Morrow on our team, and you can build yourself for a fourplex or sixplex, and you can live happily ever after once you've done that a few times. You can work with Stephanie Saunders, who is Windsor's specialist. She's the only one I know in Windsor that actually focuses full-time on house plus additional dwelling unit. So Stephanie can show you the various neighborhoods where it makes a lot of sense. I just did a video on this, by the way. But where you add an additional dwelling unit, you rent out both units. And now what you're doing is you're helping to solve the housing crisis because you just doubled residential density in that property, right? You've gone from one family house to 2 units. And you're helping to solve the housing crisis, and you're also making a nice fat profit doing that. You can choose to keep reselling those, or you can choose to hold on to them, or a combination of both. There's a lot of money to be made in that. But you're able to do these things with confidence, knowing that the interest rates are coming down quickly, knowing that Windsor's having a massive influx of population to sustain and support the massive economic growth that we're seeing with all the new factory announcements, all the freeways, all the new hydro lines, gas lines, mega hospitals, international bridges. It's insane down here, right? Doug Ford the other day was up at a podium with 4 pages of announcements for Ontario, and he jokingly said over half of this is Windsor, right? Just put that in context, guys, right? So understanding that there's all this economic momentum down here, followed by a massive population increase. You don't just have the housing crisis down here like you have across the rest of the Western world and across Canada. What you have is an acute housing crisis that's only going to get worse. So as an investor, understanding that the interest rates are going to continue to come down, your housing prices are naturally going to go up, especially in a city where, like Windsor, where you have a massive shortage. You'll see rents continue to go up as well. And yeah, for an investor, it's a really good time. Really good time to invest in turnaround projects, house plus ADU with Stephanie, infill lots with Sadie, build your 4s and 6s down here, et cetera, et cetera. Okay, guys, I'm Reese Trina from the Vanguard team at Manor Realty. I hope that was understandable about what's going on with the federal government, or the federal bank rather, and how it's going to affect us, and why you should see really speedy interest rate drops now that America is also playing ball and dropping their interest rates rapidly. All right.